But it is good to note here that we had overall market appreciation of about 1.7%. And I'm going to go through specific cities because there were some winners and there was a loser in that category. One of the biggest questions that we get as agents, in fact, I'm thinking back this week, I probably got this 4 or 5 times this week, and it's the very simple, Lance, how's the market? How are things looking? What's been going on lately? How did last year end up? I think I probably got that. I'm a frequent Americano drinker, so I think I probably got that question at Starbucks like 3 different times over in the last week. And then I think people that listen to the show know that I really kind of geek out over real estate data.
Yes.
And so here we are now. We're going into we're mid-February, and we've now got all of our numbers collected and data from what actually happened last year.
Okay.
And I always like to kind of go over this with people. And this is like engineers. This is like the engineers, mathematicians. This is your favorite show. Okay. And so they love this show. And so I broke down all the data to see exactly what is happening in different specific market segments in the Tri-Cities. And, it's always interesting when we break down these numbers to see exactly what was going on. And this is how I like to answer that question, like, Lance, how's the market? And so overall market, I'm going to start at a broad scale. And so today when we're talking about things, one of the things I go to is real estate is local. And so today when I'm talking about the market, I'm going to be covering specifically Richland, Kennewick, Pasco, West Richland, and Benton City. And so those are the numbers that I've pulled from to kind of do the discussion today. Now, if somebody calls me from Walla Walla and they're selling, then we have a specific conversation about those stats, or Hermiston or Pendleton. But we're looking at that metro Tri-Cities market, and those are the cities that I've defined it by for this. So when we look at that and someone says to me, Lance, well, how's the market? Well, the first thing I say is that overall, the market has rebounded well. And so this is the reason I say rebounded well is because when we looked at the data for 2023, I pretty much described it as a bloodbath in 2023. When we look at number of transactions, dollar volume, that was kind of the trough. That was kind of the pit of where we landed. A lot of it had to do with that most of the year we were just battling the inflationary interest rates, which were, at one point almost as high as 8%. So, 7.5%, 8%. So when that happened, transaction volume was way down. So to take you back to that instance, in 2023, we were looking at sales of 3,171. So now we go to our overall, and we had really good news in 2024. So we had 3,466 sales.
So it went up.
Yeah, by about almost 10%. So number of transactions, we had a 10% increase. And so when you look at that many transactions really has a trickle-down effect into our economy. So, for instance, I look around, like we had the Home and Garden show last weekend. I saw a number of our listeners out there. I talked to a lot of our vendors. It was, the weather affected the attendance a little bit, but when you look at vendors, it was packed.
Yeah.
Because when you're looking at vendors out there, there was, 9 or 10 painting companies that you can choose from, 4 or 5 builders. Every booth and aisle was pretty much packed. Also, quick squirrel side note, the Heritage Landscaping, if I had to pick best booth of show, and I don't even know if that's a thing, I'm going to make it a Lance Kenmore thing. Shout out to Heritage for what they invested in the landscaping, and they showcased some really cool products and items that they did out there. And I know, I look at that, and that is a massive amount of work to set up in there and then tear down. So if anybody saw that, fantastic job with that booth out there. But what I'm talking about from a trickle-down perspective is when you look at those additional 400 transactions that we had in the market last year, that represents $180 million worth of real estate transactions.
Wow.
So our 2024 total of real estate transactions was $1.6 billion.
Wow.
Where the previous year, was 1.433. And so when you're looking at that, if you look at just the real estate industry alone, like if you just look at an average commission rate, those additional transactions pumped another $9 million into the real estate brokerages in the Tri-Cities. And that makes a big difference. And then that trickles down to what we buy and money we spend in the economy. So it was a big rebound in that situation. The next thing that I start to look at is, what did prices do? Because it was a shocker for everybody in 2023 to see actually prices depreciate slightly. When I announced those numbers last year, I took a lot of heat for that locally in the market. Number one, people didn't like me announcing it. Number two, though, it was the reality of what was going on in those situations. But it is good to know here that we had overall market appreciation of about 1.7%. And I'm going to go through specific cities because there were some winners and there was a loser in that category. Ooh. But overall, what that does is that takes us back to what I expect to see in a normal Tri-Cities market. And that is, 2 to 3% for max normal appreciation rates for what we've seen historically in this market. And so that brought us to an average sales price, a 2024 average sales price of $459,000. And which, when some people, you hear that number, that's a large number. But just for comparison, that is still below the U.S. average. So the 2024 U.S. average was $512,000.
Wow.
But, we've closed that gap. 5-7 years ago, you always heard people say, man, Tri-Cities is so affordable and average prices are $359 and, the nation's is higher. We're now, we've closed that gap significantly where we're not very far off the national average. And so when you look at that, you've got to be careful because when people are relocating, how much equity are they taking from this market to a new market? Is what they're selling in California now a big difference from when they get here? Still cheaper than a lot of those markets, but by not as big of a delta. So average sales price Tri-Cities appreciated roughly 2% and now around $459,000. So the next thing that we start to do is we start to look at specific cities.
Okay.
Because that's another question people will have all the time is they'll come here and they'll be like, what city should I buy in? And they'll be like, what has the best value? Well, you got to define what that means. Do you mean what has the highest sales price? What city appreciated the most? You got to define what's most important. If we're just looking at average sales prices, though, last year in 2024, Richland had the highest city average price at $494,000. So Richland coming in at almost $500,000 on the average sales price. Their appreciation, though, when we looked at that 1.7% average, Richland, though, also beat. They were 3%. So 3% appreciation in Richland, but you're going to pay a little more to be there in that. That represented 26% of the sales. So 26% of the sales in the market were in Richland. And the average days on the market, here's the thing though, higher sales price sometimes takes a little bit longer to sell. So they had 52 days on the market, which was the highest of the 5 that we're looking at. So Richland coming in at 494. Now, second highest was West Richland. West Richland average sales price, $462,000.
It's growing.
It's growing, but West Richland, only 7% of the market, smaller number of sales. But here's the thing about West Richland, and you've got to look at what caused this. Of the 5 metro cities that we're looking at, West Richland, if you look at averages, actually depreciated by 4%. So you've got to look at that and say, okay, well, what does that mean? So I don't want everybody that listens to this think, oh my gosh, my house went down by 4% in West Richland. We're looking at an overall number, and then I always encourage people to go to neighborhood specifics. So prior to 2024, what do you have in West Richland mainly? You have a lot of larger lots. So you get half-acre lots, you get 1-acre lots. You've got a lot of kind of estate-type houses out there in the past. And so generally, those bring a higher sales price. And so we've had a very high average number for West Richland. What do you have happening in West Richland right now? If you ever go out Van Giesen all the way and you go to Red Mountain or you go out there to the Raceway, you have smaller multifamily units that have gone in. You have townhouses that have gone in. You have Aho building massive tracts of homes out there. When you look at all of this, that is a very different style than you've traditionally had in West Richland. And it's not, I'm not saying it's bad or good. I'm just saying
it's different.
It's different now. And so when we're looking at pure averages, we're seeing that number went down from previous years, mainly because you have a lot of starter style homes that are more affordable out there selling. So, I mean, when there's enough of that happening, you're going to see some of those averages come down. Now, here's the thing, though, about that. I just talked to you about Richland with 52 days. Statistically, this is a major change. West Richland average days on the market, only 38.
Ooh.
So you're like, okay, that's weird. We had a market that an average price depreciated, but only 38 days on the market. That tells you the homes, exactly with my strategy and theory, those homes, those entry-level, lower-priced homes are selling way faster.
Yes.
And that's because there's not a lot of them in the market for sale. So when they come on, they're a good deal and a good value, and they're going quick. So West Richland with the lowest number of days on the market coming on. Now, we've been talking numbers today, and we've been talking appreciation. And when we talk overall market appreciation, we said, okay, Tri-Cities has gone back to a very standard 2 to 3% when you look at that blended appreciation. Now, you have to, though, take that city by city, neighborhood by neighborhood. So when people ask me at Starbucks, Lance, how's the market? I can give a top level, answer and what's been going on. And then when someone really needs to sell, we go into more specifics. So here's one of those specifics that is kind of shocking. When you look at Benton City, and I include Benton City in those 5 cities that we're looking at for the metro market. You look at 2024, and if you look at average sales prices, they had a 13% appreciation rate. Yeah, 13. And we're talking about a blended average in the market of only 1.7 to 3 in most of the other cities. So you got to say, well, how is that even possible when you're looking at that? And so that's a number that makes you like triple check the number, especially if you're going to be on the radio like I am. So you're like, okay, so what went on to cause something like that happen? So number one, I consider Benton City, and we haven't really had to deal with terms like this in the Tri-Cities, but Benton City is what I consider a bedroom commuter city for the Tri-Cities, for Richland, Pasco, Kennewick. So a lot of people are going to live and sleep in Benton City, but then commute into Richland, Pasco, or Kennewick for work. Okay, so what makes that happen? Well, what makes that happen is, we talked about average sales price, is that they have the lowest average sales price at $430,000. But that still represented a 13% appreciation over 2023. And so when this happens, I also believe this was a solution to an affordability problem. And so you had 21, prices ramp up, 22, prices ramp up. People start to say, this is not sustainable. I can't buy a home, a starter home for that. In these cities for these prices, they're ridiculous. So let's drive a little bit and see what we find. So you have a number of builders go out to Benton City. You've got Ambiance Homes, you've got ProMade, you've got Nutred. So a lot of people pick up land out there and they do some developments. And then all of a sudden you have a lot of new construction going on in Benton City, but at a price point that cannot be delivered in the big three. And so then you have a rush of buyers out there, and they go out, and a house they would look at in Kennewick might be $450,000, $470,000, and they go look at that same house in Benton City, and they're bringing that in at $430,000. And so when that happens, there's a lot of sales, but you also start to see some appreciation close that gap. Now all of a sudden you're getting a lot of sales in Benton City that are not just old farmhouses from the 1940s. They're brand new construction houses bringing these higher dollar values. And so that is why Benton City was the number one winner in appreciation out of those homes in the last year in 2024. Coming in just behind that, interestingly enough, you see Pasco make a big jump in market share, but prices hold flat. So it was almost 0% in the average sales price appreciation. Pasco coming in at $455,000, but where in 2023 they only had 24% of the market with all of the new subdivisions north and off of 68 and Road 100. A lot of builders jamming a lot of houses out there. We also have a national home builder now in the area that's building units and numbers out there. They went from 24% to 27% of the market for sales. So Pasco making a big jump in market share that they took from some of those new sales out there. And then we cannot forget, we do not last, but definitely not least, because the lion's share of the sales, Kennewick coming in at $443,000 for the average price, which represented about a 3.5% appreciation rate.
Okay.
But get this, Kennewick, 1,239 sales. Kennewick consistently taking about 36% of the market share between those five cities. So the lion's share of those sales happening in Kennewick. Number one, it's bigger. Number two, you've got lots of great developments in the Southridge area. I mean, when you look at what was done along Bob Olson Parkway, you've still got some expansion in East Kennewick off of 45th. You have a number of new subdivisions that have continued to fuel growth there. So you're getting a very, very standard amount of appreciation and a kind of a very normal trajectory for that. But a lot of sales, 1,239 of those sales happening there. The next thing that we look at when I'm looking at how the market's doing and what the data says, and that is, how are people buying these homes, financing them? Are they financing them for one? Where's the money coming from? Show me the money in that situation. So when you look at what went on there, conventional financing stayed very, very much the same. In fact, once again, this is one of those numbers where it's like, I'm triple checking. Did I do my math right? Conventional financing, 56% of the market. So 56% of the time, people are going to use a conventional loan. They're going to have probably between 5 to 20% down in those situations. And that's how they're going to finance the house. Now, one of the biggest statistical changes was that FHA went from 17% of the market to 21% of the market. There were 725 FHA loans done out of those 3,400 sales.
Okay.
So big statistical jump there. 4%, that's a big jump when you look at the market. So you look at what's driving that. Higher prices, less savings. So you're looking at first-time home buyers a lot of times in the FHA market, not as much savings for down payment. And with the higher price, they might have the same dollars, but if houses have gone up from 400 to 450, they can't put 5% down anymore. So they got to look for a program that's only 3.5%. It's driving more people to use the FHA financing. And so it is literally 21% of our market is what we looked at. Now, interesting about those numbers is generally right behind that, we're looking at VA financing. And so veterans are using the VA loan option. 2023, that was 8%. Interestingly enough, in 2024, that number went down to 6%. So you got to look into that. What happened in 2024? Well, we had a lot of the commission lawsuits going on, and the VA loan was probably in the most flux for the largest number of months, meaning that a lot of people, when they use a VA loan, they're using like a zero down loan option, and they're getting lots of contributions from the seller to make that happen. Well, we went through a 3 to 4 month time period where people didn't even know if the seller could even contribute to those costs. And so a lot of people that might have used a VA loan, it's my assumption that they likely ended up using conventional financing or a different loan program, so they could be compliant with those new rules. So that was a big change. And then the other change in our market was in 2023, we had cash sales driving 17% of the market. And in 2024, that number was only 13%. So FHA loans went up, cash sales in the market went down. And part of that, I think, was just due to uncertainty in the market. So if you look back on 2024, we had an election coming up. People were holding off making decisions until they knew where things were going to settle out. So I think that caused some hesitation in the market as well. You also had in 2023 rates that were so high that a lot of times I think they were driving investor sales or family members to buy houses, and then allow family members to move into them, because it didn't make sense to buy with an 8 or an 8.5% mortgage. And so people were finding different ways with cash investors. There were some investor buys then. Now as the market's kind of settled down and it gives a little bit more room for people to get financing, we saw that number start to decrease. And then the last number that I ran for everybody to kind of just show where the market is and things you have to look out for, and that's days on market by price range. And just to kind of show what people are dealing with. So when we had one of our pick threes, there was a house that was below 300,000.
Yes.
That range actually is the lowest days on the market, because it's hard to find a really good house under 300,000.
Yes.
That was only 34 days on the market for that price range, which is really, really quick. Now, for instance, if you pair that with the worst price range days on market wise, that is from 600 to 900,000. And that is over 70 days on the market, like 73 days on the market. So if you're going to be selling a house that costs that much, you're going to be on the market at least another month and probably another 2 if you're just looking at the averages. Part of that is that $600,000 to $900,000 house is probably a move-up house where somebody else has another house to sell to get equity from that to buy this one. And so those are going to be on the market a little bit longer. So you treat those two very differently when you're pricing. You could be a little bit more aggressive with the $200,000 to $300,000 price point. If you're too aggressive at $600,000 to $900,000, the house is probably just going to sit and not get the showings it needs. And then it's ironic in our market, but when you get to $1 million plus, days on the market actually go back down. Ooh. So I just told you 600, 900,000, you're looking at 73 days on the market. if you go to $1 million plus in our market, it's only 53 days on the market.
Wow.
So if they're priced properly, $1 million plus, and for me, the biggest difference that I see here, and I can tell you what I attribute that to, buyers 600 to 900 in our market are generally still financing.
Oh.
And so when they're still financing, there's another house to sell or something else going on.
Yes.
In general, the buyers I see $1 million plus don't have to be contingent. They don't have to sell another house to buy that house, or they're paying cash for that house. And so with that being said, when a good deal comes on the market, a good deal's relative.
Yeah.
Somebody might say, Lance, nothing over $1 million's a good deal. But there are, because when something properly priced and that comes on, somebody with cash or not having to be contingent can jump on that. And so that lowers the number of days on the market. And so that market, pretty active. It's still just 53 days on the market.
Wow.
So Lance, how's the market? Well, I'm going to tell you the next time you see me at Starbucks, it depends. And so that's going to, the next week or two, that's going to be my answer. And we're going to talk about segments and what you're after. We've got numbers for both.
Yep.
I love to talk about this stuff. We love to use this when we analyze where you should price your home to sell and what you should be buying. If you have any questions at all about what you heard today, go to kenmoreteam.com, shoot us a message, and we'll be right back here next week.